Have you ever found out that your coworker is making the same amount of money as you, but they're getting a refund and you're owing the IRS? And no, it doesn't mean that you did anything wrong, nor does it mean that they have a better tax pro necessarily. But this question comes up at my desk every single tax season. And that's because it's one of the most misunderstood parts of taxes. If we haven't met yet, my name is Nixon. I am an AFSP tax analyst here in Houston, Texas. And this is the T on taxes, where we talk the T on all things to do with your taxes. That was super weird. Okay, today I'm gonna go ahead and clear up why two people with the same income can have vastly different outcomes. So here's the key thing that most people just don't realize. Taxes are not just based on income alone. Income is just the starting point. And that outcome really depends on how the income is moving through the tax system. So instead of asking, why is my coworker getting a refund? The better question is, what's the difference about how my income is set up versus theirs? Because first, not all income is taxed the same way. Someone's W-2 income is going to be taxed differently than someone's, say, self-employment or gig working income. There's also some income that is subject to payroll taxes, and then there's some that are not, such as investments. Two people can earn the same amount of money, but have very different tax calculations. And part of that is based purely on how that income was earned. The next point is that the withholdings that you have are not what you really owe. And that one matters a lot, because getting a refund doesn't mean that someone paid less in taxes. What it usually means is that they paid more than what was required to begin with. So owing taxes doesn't mean that you failed the tax game. Often it just means that your withholdings were actually closer to being accurate to the estimated tax. Really, you don't want a refund, because that means that the government kept all your money all year long, and instead of having it in your pocket, and they did this interest-free. Versus if you had their money, they would make you pay interest. So who's getting the better deal here? Them. So what you want to do is get as close to zero as possible. This is to go ahead and make sure that you're able to keep all your money in your pocket all year long. So I want you to start thinking of your tax return as a reconciliation process of your income versus your taxes, and not as a savings plan that you get at the end of the year. Now, thirdly, the household structure changes everything. Your filing status matters, whether you're filing single, married, head of household, if you've got dependents, all of that matters because credits matter. So two workers can earn the same amount of income, work at the same job, but if they live in two different household situations, that's going to completely change their outcome. And really, the tax system is based around households, not just paychecks. Number 4 is that deductions don't work the way people think. And this is something that a lot of new clients that I get are really surprised about, because deductions is not a dollar for dollar tax savings. That's what credits are. And not everyone benefits from deductions in the same way, because there's some people who take the standard deduction, others itemize, and there are some deductions that completely phase out because you make too much money. So comparing your deductions with a coworker will rarely tell you anything useful. Now, my 5th point is about timing and planning. This is where the tax strategy actually lives. When your income is received, when your expenses are paid, when your contributions are made. All these decisions matter more than anything you do at filing time, because it can determine what you can and cannot do for the year. But remember, filing reports the past. Planning is what's going to shape your future. Going back to what we were talking about before, when two coworkers are making the same amount of money but having different results, it's usually not about fairness, and it's definitely not about intelligence. What it is, it's about structure, timing, and decisions. So here's the takeaway that I want you to go ahead and remember today. Your tax bill is not a moral judgment. It's just simple math results. And it's based on how your financial year was set up. And once you understand that, your tax return is going to feel a lot different. If you want or need any help seeing what actually matters before you file, be sure to go ahead and grab my tax prep checklist. This will help you get kind of understand the full picture. I'll go ahead and share the link down below. Now, it's not going to magically help you lower your taxes, but it will help you stop guessing about especially about what to bring at your tax appointment. And if this helped you at all, please hit that like button down below. It helps more people see my videos. And don't forget to subscribe to the channel so you don't miss the next Tea on Taxes episode. Until then, keep on sipping. Bye.